Welcome back to the Empire Cycles. We are standing on the precipice of a new year, but more importantly, we are standing on the fault line of a global financial fracture. If you're listening to this, you suspect that something is fundamentally wrong with the numbers flashing on your screen. You suspect that the price of silver you see in New York is a lie. And today, I am not just going to tell you that you are right. I'm going to prove it with a mathematical certainty that is terrifying for the banks and exhilarating for the prepared. We are witnessing a phenomenon I call the Great Bifurcation. For 50 years, the world agreed on a single price for silver. Whether you were in London, New York, or Tokyo, the price was the price. That agreement has been shattered. As we close out 2025, we have two realities. We have the Western reality, a paper simulation where silver trades at $74, and we have the Eastern reality, a physical marketplace where metal trades at $100. This is not a spread. This is not an arbitrage. This is a divorce. The East has filed for divorce from the COMEX, and they are taking the custody of the assets. But before we dive into the geopolitics, we must ground ourselves in the hard data. I want to talk about the miners. I want to talk about the companies that actually dig this value out of the earth. We have been analyzing the chart of the Global X Silver Miners ETF, the SIL. And what we are seeing on the screen is not just a trend. It is a declaration of war against the bears. Let's break down the technicals of the SIL ETF right now because it tells the future of the metal itself. When we look at the weekly time frame, we are seeing a pristine textbook ascending channel that has been respecting its boundaries with almost algorithmic precision. This is what we call a high conviction structure. The market isn't guessing here. It is moving in a calculated upward rhythm. We see a series of higher highs and higher lows that creates a geometry of accumulation. Most importantly, look at the recent price action on the daily chart. We saw a sharp pullback recently, a shakeout designed to scare the tourists. The price dropped, and where did it stop? It stopped exactly to the penny on the lower trend line of that ascending channel, right around the $84 to $85 zone. It didn't break. It didn't collapse. It touched the line and immediately found a wall of buyers. This is a technical kiss of support. It confirms that the $85 level is concrete. The smart money, the institutional whales, have placed their buy orders at that trend line. They are defending the structure because they know what is coming. Furthermore, look at the momentum indicators. On the daily chart, the oscillators have reset. The RSI has come down from the overbought territory into the neutral zone, while the price held the trend. This is the holy grail of technical analysis, a bullish consolidation. It means the market has vented off the excess steam without losing any structural ground. We are now coiled. The spring is compressed against that lower trend line. The energy stored in this compression is immense. When you combine a technical bounce off the bottom of a long-term channel with the fundamental vacuum happening in China, the target isn't just the top of the channel at $90. The target is a breakout that redefines the chart entirely. We are looking at a technical setup that projects a violent expansion to the upside, likely carrying the miners past $120 as the physical metal catches up to Shanghai. The chart is telling us that the miners are pricing in a reality that the paper market hasn't admitted to yet. The stocks are leading. The smart capital is positioning for the inevitable snap, and that snap is being driven by the vacuum in the East. Let's understand why Shanghai is trading at $100. This isn't speculation. This is desperation. China is the factory of the world. They produce 80% of the world's solar panels. They produce the vast majority of the electronics. Silver to them is not a stock ticker. It is a strategic raw material. It is as essential as oil. Right now, the inventory in China is critical. The warehouses in the Shanghai Free Trade Zone are empty. The industrial users are bypassing the exchange and going directly to the refiners, offering cash premiums of $25 over the spot price just to secure delivery. They are saying, I don't care what New York says the price is. I need the metal to run my assembly line. This has created a vacuum effect. Silver flows to the highest bidder. It is a law of physics. If New York pays 75 and Shanghai pays 100, every ounce of silver on the planet is moving east. The vaults in London and Zurich are being drained to feed this spread. We are seeing export numbers that are off the charts. The West is literally shipping its wealth, its strategic heritage, to the East in exchange for paper currency that is losing value by the day. This is the final looting of the Western vaults, and the banks in New York are powerless to stop it because they don't own the metal. They only own the IOUs. The disconnect we are seeing, this $25 gap, is the death rattle of the fractional reserve paper market. You cannot suppress the price of something that is physically disappearing. You can print paper contracts until you run out of ink, but you cannot print silver. Eventually, the physical shortage forces the paper price to reset. We are in the final days of that suppression. The technicals on the SIL ETF are showing us that the floor is in. The buyers are here. The channel is intact. And the rocket is on the launch pad. We have established that the technicals are screaming buy and the East is screaming for metal. Now we need to look at the mechanic of the explosion. How does this actually play out in the first weeks of 2026? We need to talk about the short trap. The bullion banks, the massive financial institutions that dominate the COMEX, are currently sitting on one of the largest concentrated short positions in history. They have sold billions of ounces of silver that they do not have. For decades, this worked because nobody asked for delivery. Investors were happy to hold a paper receipt. But the Shanghai premium has changed the psychology of the market. Now, everybody wants delivery. If you hold a contract in New York worth $75 and you know you can sell the metal in Shanghai for $100, you're insane if you don't take delivery. You're leaving $25 of risk-free profit on the table. This is causing a run on the bank. The holders of long contracts are standing for delivery in record numbers. They are showing up at the vault with their trucks and saying, "Load it up." And the banks are terrified. We are hearing rumors of cash settlement offers. Banks are calling clients and offering them significant premiums to not take the metal. Here, take cash. Take a bonus, just don't take the bars. This is the definition of a default in slow motion. When a bank pays you not to take your asset, it means they don't have the asset. This panic is exacerbated by the date. It is New Year's Eve, the books are closing. But in 2 days, a tsunami of fresh capital hits the market. We have to talk about the passive flows, the index funds, the pension funds, the rebalancing algorithms. At the start of every year, these massive pools of capital rebalance their portfolios. After the performance of silver in 2025, the algorithms are overweighting the sector. They are programmed to buy winners to capture momentum. Billions of dollars of blind capital are about to hit the silver market in the first week of January. This capital doesn't care about the price. It has a mandate to buy. It will hit the ask price relentlessly. Now, imagine this buying pressure hitting a market where the sellers have vanished. Who is selling silver at $75 when China pays $100? Nobody. The miners aren't selling. They are holding back supply. The investors aren't selling. They are stacking. The only sellers are the desperate banks trying to hold the line. When the January buying wave hits the empty vault, the price has to go vertical. It is a liquidity crisis to the upside. We could see days where silver moves $5, $7, $10 in a single session. We could see the circuit breakers trip. The market will try to find the price where sellers finally agree to part with their metal. And if China is the benchmark, that price doesn't start until we cross triple digits. Let's look deeper at the industrial side, because this is the floor beneath our feet. The narrative of recession is false when it comes to silver. You might have a recession in consumer handbags, but you don't have a recession in energy transition. The demand for silver is legislated. Governments around the world have mandated net zero targets. That means solar panels. That means wind turbines. That means electric vehicles. You cannot build a green economy without silver. It is the most conductive metal in the universe. It is non-negotiable. The solar industry alone is now consuming nearly 25% of annual supply. But here's the kicker. The new technology, the TOPCon and HJT solar cells, use 50% more silver than the old panels. So even if the number of panels stays the same, the demand for silver goes up. We are seeing a step change in industrial consumption that the mining supply cannot match. The SIL chart we analyzed earlier, that ascending channel, is simply a reflection of this deficit. The market knows that the miners are the gatekeepers. If you want the metal, you have to pay the miner. And the miner is finally in the driver's seat. We also need to discuss the ghost inventory. For years, analysts said there were huge stockpiles of silver in the world. They were wrong. Much of that reported inventory has been double counted, leased out, or is simply not available at current prices. It is grandma's tea set. It is buried in landfills and old iPhones. It is not available to Apple or Tesla. The accessible commercial inventory is dangerously low. We are operating on a just-in-time delivery system for a metal that is running out. When just-in-time meets unavailable, you get a supply chain collapse. That is what we are seeing in Shanghai. The supply chain broke and the price snapped to 100. That break is moving west. It is crossing the ocean. Now, consider the geopolitical angle. We are in a world of fragmenting trust. Nations are no longer trusting the US dollar as the sole reserve asset. They are diversifying. Central banks are buying gold at record paces. But as gold becomes too expensive, the retail public and the smaller institutions turn to silver. Silver is the people's gold. In a currency crisis, silver is the transactional metal. We are seeing massive retail buying in India and Turkey, countries that understand inflation viscerally. This isn't just a speculative trade, it is a survival trade. The setup for 2026 is perfect. You have the technicals aligning with a bullish channel support. You have the fundamentals showing a historic deficit. You have the arbitrage gap draining the West. And you have the seasonal inflows of January about to light the fuse. The bears are trapped. They are shorting a rocket ship. And the fuel tank is full. We have covered the crime, and we have covered the mechanism of the correction. Now we must cover the most important part, your survival and your prosperity. Here at Empire Cycles, we don't just analyze the pump. We analyze the cycle, and every cycle has a beginning, a middle, and a violent end. How do you navigate a market that is going parabolic? How do you keep your head when everyone else is losing theirs? The coming weeks will be volatile. The banks will not go down without a fight. They will use the media to spread fear. They will engineer flash crashes to try and trigger your stop losses. You must expect this. Do not be shaken out by a $2 drop when the destination is a $50 gain. Look at the SIL chart again. Remember that channel. As long as we stay within that upward trajectory, the trend is your friend. Every dip to the lower trend line is a gift. It is an invitation to accumulate wealth at a discount. We are about to enter what I call the Unobtanium Phase. This is a specific period in a hyperbull market where the price on the screen becomes irrelevant because you simply cannot buy the metal. The dealers will put up out-of-stock signs. The premiums will detach completely from reality. You might see spot at $80, but the physical coin cost $120. In this phase, possession is 10/10ths of the law. If you don't hold it, you don't own it. The paper contract holders will be settled in cash, paid out in depreciating dollars, while the real asset moves out of reach forever. This is why we stack physical. We stack to survive the Unobtanium Phase. You need to understand the psychology of the century mark. $100. It is a psychological barrier, a mental dam. Once silver breaks and holds $100 in the US market, the media blackout will end. Suddenly, every financial news station will be talking about silver. Your Uber driver will be talking about silver. Your relatives who told you that you were crazy for buying rocks will be calling you, asking how to buy. This is the public mania phase. The fear of missing out, FOMO, will kick in with a vengeance. This is the retail wave. When the public realizes that their currency is dying and that silver is the cure, the buying pressure will be like nothing we have ever seen. The liquidity of the silver market is too small to handle the public's money. It is like trying to pour the Hoover Dam through a garden hose. The pressure will blow the price to levels that seem ridiculous today. $150, $200. These are not fantasies. They are the mathematical result of infinite fiat chasing finite real assets. But here is where Empire Cycles separates the gamblers from the strategists. You are already positioned. Your job now is not to chase. It is to sit tight and let the market come to you. But you must have an exit plan. A bull market without an exit plan is just a roller coaster ride. You end up right back where you started. We don't sell silver for dollars to keep the dollars. Why would you trade a king's asset for a pauper's promise? We sell silver to buy other distressed assets. We watch the gold to silver ratio. Right now it is 60-1. It is screaming buy silver. But when that ratio drops to 30 to 20 to 15, that is when we make our move. We swap the overvalued silver for undervalued gold. We swap it for productive farmland. We swap it for cash flowing businesses that have been beaten down by the recession. We trade the speculation for the legacy. That is how you build a dynasty. You ride the wave up and you step off onto higher ground before the wave crashes. Let's get specific about the first week of January 2026. I'm predicting a gap up open. We might see the market open significantly higher than it closed on December 31st. This will leave the shorts trapped with no exit. They will be forced to cover at market prices, fueling the rally further. Watch the $85 level on the SIL ETF. If we blast off from this support, we are looking at a straight shot to new all-time highs for the miners. The leverage play here is massive. If silver goes up 10%, the miners could go up 30%. The SIL ETF is the coiled spring we talked about, but be warned, the government will eventually step in. When silver becomes a threat to the stability of the dollar, they will change the rules. They might raise margin requirements to 100%. They might impose windfall profit taxes on miners. They might even demonize hoarders. This is the empire striking back. Empires do not die quietly. They lash out. This is why you must be agile. You must be ready to pivot into other assets once the regulatory heat becomes too intense. This is why we watch the cycles. We are watching the greatest wealth transfer in history. It is moving from those who trust paper to those who trust physics. It is moving from the blind to the visionary. You have the vision, you have the data, you have the chart. This is the year the manipulation breaks. This is the year the dam bursts. 2026 is not just another year. It is the year of the squeeze. The East has set the table. The West is about to be served. Stay sharp, stay liquid, and most importantly, stay positioned. The price you see today is the last chance to board the ark before the flood. Stay tuned. The next update may change the game, and PLS, if you like the content, subscribe, like, and share the video. Welcome to the future of value. Welcome back to the Empire Cycles.